Good morning. It's Tuesday, July 29th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at the quick price action here in gold and silver overnight and some housekeeping, we are going to be rolling the August gold futures most likely over to December today. I'm monitoring the open interest and the volume on that December contract. So intraday traders may want to look at October as there might be more volume, but you go out to December, it looks like the open interest for a long-term run is starting to build over there. So if you're long the August gold futures, you could expect to get a phone call from me or my team here sometime today. Now, looking at the silver market yesterday, the ETFs added another 779,000 troy ounces of silver to their holdings here. This was the sixth straight day of growth and the longest winning streak since June 13th. So they're continuing to pile into those silver ETFs here, really looking for that potential breakout to the upside as the market has kind of been in this consolidation phase here over about the last week or so. If you get the chart pack, you can see that we're coming back down to this upward sloping line where the market has held that support. Now, something to note on the silver market is you're seeing a series of higher lows and higher highs on the chart. So we really want to continue to monitor and see that momentum and see if we could start to break out back above that 52-week high, which is going to be right around 39.91. Came out last Wednesday when we hit that high. Again, President Trump announced a possible deal with the European Union. You saw gold futures decline about $40 on that. You saw the dollar index start to lift and really was a turning point in the dollar here recently. Also the same thing with yields turning back up, and that's where the pressure came in on the silver market and fell, and it's continued to sell off here to a new level of support. So if you look at again yesterday, ETF flows continuing to move in. The 5-day price change, and that's one thing that I do monitor in the silver market. Now we are up about 8-9 cents here today. September trading at 38.31 here last, so just up a little bit. Gold silver ratio sitting at 86-1. Silver futures again 38.31, but it's the 5-day change where you really have had this washout occur. It's been down about $1.21 on that 1,000-ounce contract. That's about a $1,200 move lower, or falling about 3%. 52-week high again, 39.91. We want to keep an eye on that and that on our radar. Going to the dollar index here, up about 13 ticks here, 98.53 last. Big sell-off in the euro, big sell-off in the British pound. British pound touching multi-week lows here yesterday. So the dollar rallying about 1% on the week, but you really want to keep an eye on because you see the dollar index pushing up quite a bit, not really killing that gold market. So if you look at the cross-asset correlation, that's one thing that I do monitor here that I built an Excel file on, is the correlation matrix between gold and also the dollar and other key components and other commodities out there. And what you'll notice here is that structure has really been changing over the last couple of weeks, where it was highly negatively inversely correlated, and now those correlations are really starting to burn off here. So the dollar index also getting a boost because of expectations that the Federal Reserve is expected to keep those interest rates unchanged, slightly supportive, but that is just for now. If you go to the Fed Fund futures, you go out to that September 16th, 17th meeting, you can see there's about a 66% chance of a 25 basis point interest rate cut, and that really could open up that cutting cycle here ahead. You go to the gold market and look at some of the dynamics of that. Again, August up $12, 33.22, holding about that 3,300 level as your key level of support. You'll want to take some of those support levels that you've got on the August contract and then correlate those over to either the October or the December, depending on which contract month you're going to prefer to trade based on your trading style here. So look at the 5-day change, big washout in the gold market, down about $121. That's about a 3.5% decline here, and falling to a 2.5-week low yesterday. It's really been the easing trade tensions that have undercut that safe haven demand, and we see that safe haven demand come off also in the 10-year Treasury notes. You've got China and the U.S. They are looking to extend their trade truce here for about 3 more months. So you got Commerce Secretary Lutnick. He said that a 90-day extension of a trade truce was likely to be the outcome with China, with some negotiations taking place between the two countries underway in Stockholm. So we will have the Fed's 2-day policy meeting kicking off. Tomorrow, you're going to have that interest rate decision. Again, a 25 basis point interest rate cut coming out tomorrow, about a 3% chance here. So If you look at the way things are setting up, though, you go again out to September, 66% chance. This is where Fidelity, now they've released a report here on the gold market. And I'm going to pull that one up as soon as I finish recording this video, that they're calling for $4,000 an ounce by the end of next year. So much longer term, and basically they're looking at a steady grind higher. Remember those underlying fundamentals like central bank buying, portfolio diversification. There's been reports come out where you have a lot of people, and I talk to these people all the time on the wealth management side, where they have a 60-40 portfolio. And if you start to add small slivers, and I'm not talking big positions here, just small slivers of things like oil, things like gold into those portfolios, you tend to get a little bit more diversification than we've seen where Middle Eastern conflicts have arisen, and we've seen oil futures rise up. Oil futures are also one of the best indicators of rising inflation. And then you go to the gold side. Gold tends to perform best in stagflation environments and even interest rate cutting cycles, which we're expecting to see. You've got slightly elevated inflation. You've got lower growth here coming along in the United States. You've got robust global growth going on, and that's why your copper futures have been quite elevated. Now, there was some volatility in the copper market, touching that support level that we outlined in the chart back before, getting right around 542, 546 before rejecting those levels and shooting back up. On an announcement that one of the South American countries was looking for some tariff exemptions on copper, and that's the reason why the sell-off occurred. But any kind of dip in the copper market has really been snapped back here and picked back up. Now, if you look at the S&P 500, nice move higher here, 64.40 last, pushed on up to our upside target, which was that 64.50, but we've already hit that objective here, so we're going to want to look to go farther out. We're also looking at other outside markets here, like the NASDAQ, like the Russell, and the Russell's attracted a lot of attention here. So the stocks, they are set to have another record high here as the attention turns from trade deals to company results and economic data to justify some of these elevated valuations. The S&P 500 notching out its highest close here yesterday and its best rate as far as beating expectations on some of these earnings here. But remember, the bar, the hurdle has been set pretty low, and it's beating at an accelerated rate and one of the highest levels since 2021. So the S&P 500 has closed at a record high for 6 straight days. Futures just gained just slightly higher here in this pre-market and also in the NASDAQ. And we are in the thick of earnings, and we're going to want to keep an eye on that. Starbucks, UPS, Procter & Gamble, Boeing, they are all going to report here today. Again, the current with the FOMC meeting coming out, something that I start to look at is what are the options in the option markets telling us. And option markets implied moves for the FOMC meeting and the non-farm payroll are both well below the average here for realized levels over the past couple years here. So JP Morgan, their market intelligence report said that the S&P 500 has a 70% chance of gaining on Friday following that data, following that non-farm payroll data. That's why we're looking at some of these outside markets, and we were picking up the Russell 2000 for many clients yesterday because we believe that small caps, they could be primed for a squeeze as we start to see CPI come down and as we start to see these interest rate cuts start to come into play here. So we are going to have wholesale inventories for June coming out. We'll also have consumer confidence and that JOLTS job data. You look at the 10-year Treasury yield, just slightly lower here, 4.39%, down about 2 basis points. The dollar index pushing just a bit up. Euro currency under a little bit of pressure. The S&P 500 notching up another gain here, up 19 ticks at 64.41, pushing up. Volatility index just sliding lower, falling about 1% to 1.8%, depending on which contract month you're involved with. And then you get to some other markets here, like crude oil shooting up considerably yesterday as pressure starts to mount on Russia and some of these tensions between the U.S., Iran, Russia, China, who's buying whose oil, because the U.S. wants to broker a deal and they also want to sanction Russia at the same time as far as a deal with China to buy some of the U.S. energy products. Now, the U.S. did make a deal with the European Union to buy some of the energy products, and this has put kind of a renewed floor on that crude oil market. So we'll want to reassess that one on the chart back because these support levels have held up so well recently. So you go into some things, again, full week of earnings, macroeconomic events here, tariff deadline on Friday, key employment data coming out on Friday. So a bit of a volatility bump we expect to see here, but really the volatility bump is leaning to the upside here, as many of the analysts predict. Looking at the exchange traded funds, they cut about 29,000 ounces of gold holdings here. And I think it's as we start to close in on 3,300, people are just kind of stepping aside, wait for it to be more constructive. Remember, I talk about things with a lot of clients as far as targets, and I see a lot of people, they come up with a complete roadmap and a plan of their trade. They've got their stop working, they've got their target working, they're bracketing those orders, they're working OCO, they're proactively raising their stop losses and things to become better risk managers. And what do? They cancel their target. And then it's like the wheels fell off, the training wheels fell off here. And then it ends up hitting their target, selling off and things like that. I think you plan your trade, you stick to your plan, you stick to your guns, your profit target gets hit. And then what happens is that you have a mental timeout. You chalk that up mentally. I'm sure that it releases some endorphins, some positive things that go, hey, I won on that trade. Now let's come back. Let's change the time frame. Let's look at different contract months. Maybe look at an outside market that needs to play catch up here and come back in and reassess that trade here rather than canceling the profit target, keeping the stops working. And what you're going to find is a lot of times you're going to get stopped out more often than you'll have winners in these markets. And those stop losses, you have to look at it as, hey, it's a timeout on the field. That was a quick breakaway. 3 quick buckets were scored in a basketball game. It's a timeout. Let's reassess the game. Let's come up with a new plan here. Do we need to improve our offense or defense or outside shooting, our man-on-man coverage, things like that is where you want to come in here back into these markets. So a little bit of coaching here, a little bit of the things, some of the things that I go through mentally on a daily basis. And again, when it comes to commodities, it's not just one thing, it's everything in these markets. And I can tell you one last thing on the silver market, very impressed that the volatility in that copper market. And if you haven't done so, look at the price action in copper here yesterday and on the daily charts, and how well that silver had held up given all these outside things here is quite impressive. So you guys got any questions, shoot an email to info@bluelinefutures.com. You want to check out the chart pack, the metals edge, some of the other things that we're putting out here. We put out a lot of great research across all the different commodity markets. And remember, finally, that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.